one of the things that we're looking at right now is, why does the Fed want to keep hiking, and what's the reaction to the market? So the Fed wants stability. One of the things I talk about quite often is the TED spread, and it's been pretty boring over the last year. The TED spread has really increased, and this is a good measure of risk premium in the market. It's the premium that, you know, LIBOR trades at over the 3-month treasury. So short-term interest rates are going to be higher on LIBOR when there's more risk in the market. People are going to demand a bigger risk premium to get out of government treasuries. So one of the things that I find really interesting is we've just had slow moves here and there in the TED spread. It's increased quite a bit, and I really thought that was a function of ultra low interest rates, where, you know, LIBOR is just going to, you know, have a higher natural low that's going to be in that 0.5 to, you know, 1% range. So we had a higher TED spread for quite a while, and then when they announced that they're likely going to hike in March, you saw the TED spread fall out, and it went from 55 down to 38. And if you look on the right-hand side of this chart, that's a big move in the TED spread, and that's a huge amount of risk premium coming out of the market. Why did that happen? So hiking rates is actually taking risk out of the market, and that's something that may be counterintuitive, because we learned in economics that, you know, rising rates are going to have these negative impacts. But right now, we're seeing the opposite. So risk premium coming out of the market as rates rise. Again, here's a chart of the VIX. We're now approaching all-time lows in the VIX, which is showing us, you know, the lack of volatility in the stock market. The stock market just kind of has inched higher, you know, every week for most of the last year, and certainly for the last 4 months. So the VIX collapsing at this point, reaching all-time lows, as rates are rising, it's showing us that risk premium is just evaporating out of the market. So all markets at this point are generally applauding rising rates and saying this is something that's generally healthy.